Thank you, Ernesto, for taking the time to share your views on these first half year results. I'd like to start with toll roads. We've seen very positive news across the portfolio, with traffic improving in all the assets, consolidating the positive trend that we saw in the first quarter of the year, both in Toronto and Dallas-Fort Worth, and also in I-66 that opened last year. We see that ramp up is performing well. What can you tell us here?
Yes, I think that traffic in this quarter in general accelerated across the portfolio compared to a first quarter that was already good. In Toronto, we see more return to the office. Clearly, Toronto was lagging other cities in the US. I mean, it reopened later. And we see that work from home affects, but I mean, there's more return to the office. We don't know where work from home will land, but clearly the trend is very positive. Of course, our road that is part of the overall network that improved, also improved thanks to rehabilitation works in the alternative, but the trend is very positive. In Dallas-Fort Worth, very good performance, even though LBJ is still affected by works in adjacent roads, and also 35 was affected by the finalization of works. I mean, you know that we opened the segment at the end of the quarter. And of course, I-66 is ramping up, and yeah, we're cautiously optimistic, keeps improving.
You mentioned 35 West. We saw the opening of the 3C segment in June, 3 months ahead of schedule, and also we've seen the project distributing its first dividend now in June. So what are your initial thoughts here?
Well, first of all, I think that it has been a great effort on delivering ahead of time. That's fantastic news. And yes, the opening is really good. I mean, this is a segment that links to the north area of Fort Worth that is less developed, but is the area of growth for the whole metroplex, really. So looking forward to this segment. And yes, I mean, all the cash accumulated from segments 3A, 3B was distributed for $135 million to 100% of the shareholders. Is a fantastic dividend.
And moving into airports, Heathrow is recovering traffic very fast, and so it gives very good perspectives before the, let's say, peak summer season. What are your views on airports?
Yeah, I mean, demand for traffic for travel is great. Heathrow had the threat, let's say, of industrial action, and I think that management did a very good job of overstretching themselves at one point in time, and then negotiating a fair deal that meant that we can really handle all the traffic that is expected in the summer, even though some airlines are not ready yet. I mean, clearly Heathrow is beating expectations and even recording some days top levels of traffic compared to history. So demand for travel is there, and Heathrow has done a very good management job. And the rest as well are enjoying all this demand for leisure travel, and also the recovery to a very good degree of business travel. So AGS, Dalaman, all of them are growing.
And on the construction division, we've seen profitability worsening this quarter, and it seems that it's related with all big projects in the US. Can you give us some color here?
Yeah, you're right. I mean, these projects that were started before COVID and were affected by stoppage, inflation then, and really there was a lot of effort to deliver them on time. Now we're having, so the infrastructure has opened, let's say, and now they are having all the completion works, and here we are facing, let's say, out of sequence jobs. So for instance, we have to work on general purpose lanes, and we can do that at a time, but then we are told to stop, and this kind of stop and go, where having the resources there is very expensive, and it was not really expected this way. And also you have all these final things that is called the punch list on any project, where the clients are being more, let's say, demanding above the average, clearly, or the standard that we have seen in similar projects. So it's a very demanding punch list. Of course, most of these costs we should be able to recover, and we are submitting claims for that, right? But I mean, this could take long.
And in terms of cash, because we have seen a significant variation in terms of cash with still net cash position, 0.8 billion as of June, but decreasing versus 1.4 at the end of last year. What are the main drivers for the cash?
Yeah, well, the main one is a little bit one-off, let's say. That is the repayment of the hybrid that we announced with the transaction of the corporate restructuring on the way to listing in the US. And yes, we have had a successful buyback of the hybrid. The hybrid, of course, was considered as debt by but most of the analysts, right? We have repaid that, and that is close to 500 million. The rest, we had the good inflow of dividends from infrastructure, much higher than last year. And of course, we invested in equity in JFK and other projects like I-66, and also we bought back some shares at the beginning of the year. So I would say it would be pretty balanced, except for the repayment of the hybrid.
And finally, what everyone is asking, any update on the US listing?
Yes, well, now we are listed in Spain and the Netherlands, and yes, we're working on the 20F prospectus. I mean, we want to file it and hopefully get it approved before year end. So yeah, it's going on the schedule, and we're even enjoying a tightening of the spread on our corporate bonds, outperforming the broader market with similar credit rating. So everything is going on the schedule. Looking forward to it.
Great. Thank you very much.
Thank you.